Ladies and gentlemen, AMC stock is going absolutely crazy, above $5 per share. You could start to actually see a gamma squeeze at these levels. Now you're above your 50-day moving average, and there's a ton of positive things happening today. We're going to look at the Ortex data as well here in this video, and the data that came out earlier in the day today, and what we're expecting for tomorrow, and try to figure out what's going to happen next with AMC stock, guys. So let's go ahead and get into all of this information. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Now, at the time of recording this video, AMC stock is up 6.37%. The stock is at $5.10 per share. Now, $5 per share specifically is important, and we pointed this out in the last video as well, just even earlier today. $5 per share, it's important for a couple reasons. $5 per share, key psychological and technical resistance level. But on top of that, it's big for option activity as well. If we take a look at this Friday's option expiration for June 16th, the $5 strike on the call side has 112,000 for open interest. If you do some simple math here, that is 11.2 million shares that market makers potentially have to buy in the event that these go into the money. Now, they are into the money, but you got to factor in the break evens. The current break even is about $5.14 per share. The stock is $5.08 now per share. But before today, these contracts were worth a lot less. So a vast majority of the open interest really has a break even that is kind of around $5.10 per share. Call it 10 cents per share was the average price paid for these contracts. So you're right at that level where market makers have to start buying a bunch of shares of AMC. And when they do that, it's going to have a big influx of buying pressure to AMC stock. And that is because you really see low volume with AMC on an any day given basis. Recently, the volume has been all but nothing with AMC. Trading 10 million shares a day, 11, 12 million shares a day has been pretty common. So when you just think about 11.2 million shares at the $5 strike alone that potentially need to be bought back, that's significant. Now, it all doesn't happen at once. It happens over the course of hours or days up until the actual option expiration, which is going to obviously be this Friday. Now, we have another big option expiration just around the corner as well. If AMC can really start to catch a rally here, that $6 strike to the call side is also going to be massively important. You have 107,000 for open interest at that $6 strike. At the at the 550, these are actually puts too. So $5 puts went out of the money. You got 107,000 at the $6 strike. If you continue higher, that's going to be very, very bullish. Now on the call side as well, you got 101,000 calls at the $5 strike that just went into the money. So roughly similar, over 11 million shares that would need to be bought back as well on the call side. And then you got 60,000 for open interest at the 550 call, and another 50,000 for open interest at the $6 call. So when you add this up, you're at 110,000 plus 101,000. Let's go ahead and add this up real quick. 211,000 on the call side, times that by 100. That's 21 million shares potentially need to be bought back by market makers if AMC stock just gets to $6 per share. Now, same thing on the put side. Go ahead and add 11.2 million. We'll just call it 11 million. That's 32 million shares. If you go ahead and consider that maybe AMC does run all the way to $6 per share, that's another 10 million shares that would need to be bought back by market makers. All in all, you're looking at about 42 million shares that market makers would have to buy if AMC stock can just get to $6 per share. That is days worth of your average trading volume, and that would be a huge deal. Now, if we consider where some of the moving averages are right now, the 50-day moving average is currently at, let's go ahead and look, at $5.06 per share. You're at $5.09 per share. I think this will also help give us a boost. It's going to help make people feel a little bit more optimistic. It's going to give you a little bit more bullish buying pressure as well, as AMC is above that critical moving average. And you can see this kind of reflected in the Ortex data as well, in which I want to talk about in just a second. But first and foremost, the inflation data. This came out earlier in the day today. The year-over-year inflation data came in better than expectations at 4%. Core inflation came in just in line with expectations, a slight decline from last month. But the month-over-month headline inflation reading came in at 0.1%, much better than the expectation of 0.2%, and way better than last month's rating of 0.4%. So you're approaching deflation on headline inflation month over month. Now, core inflation month over month, that's where a little bit of the problem is. Expectation was 0.4%. You came out at 0.4%. Last month's rating was also 0.4%. So inflation is a lot stickier in that core metric. Now, this gives the Fed room to pause, essentially, and to not continue to raise rates. And that helps out your small and mid cap stocks and their actual valuations here. So this is something that I pointed out yesterday. The AMC stock could catch a rally today just based off of, these inflation numbers coming in lower than expectations. And that's exactly what happened. And now AMC stock is ripping. I think it's no coincidence that pricing in less Fed policy, pricing in this soft landing, pricing in no more rate hikes, that's going to give AMC a boost to its valuation. Exactly what's happening today. Now, you're going to get the Fed tomorrow, and that's also going to be very important. You're going to get a dot plot, in which I do think that will further signify that Fed members are not expecting to raise rates anymore, and they're expecting to actually cut rates in 2024. Now, the Fed cutting rates in 2024 could actually be a very bullish sign instead of 2023, because by 2024, you're going to have inflation coming down to where the Fed can cut rates because inflation's coming down. The markets at one point were pricing in 3 or 4 rate cuts in 2023. Those rate cuts in 2023 was pricing in bad economic news, bad economic data, just an overall hard landing, right? Rate cuts getting priced into the markets for 2024 would price in a soft landing, would price in inflation actually coming down as the reason why the Fed is cutting rates. I think that's important context. Not all rate cuts are considered equal. If it's because the Fed has to, because the economy is going down the toilet, that's bad. But if inflation hit a 40-year high, the Fed raised rates, got inflation down, and the economy was fine, and then they cut rates, I don't think you get that same typical bearish reaction as you do usually when the Fed cuts rates, because usually when the Fed cuts rates, it's because the economy is terrible. So hopefully that made some sense to you. This is very suggestive of a soft landing, and we'll see how the Fed comes out tomorrow. If they want to kill stocks and really talk down this rally, we'll see what happens there. But as of right now, things look pretty positive. Now, AMC stock, all things considered, option activity is now very bearish here on the day. You have seen 7 orders totaling about $11.5 million, positive order value of 7%. Again, a very negative day for option activity. This is not stopping AMC today. This is a little bit different than what we have seen in the past, because usually in the past, when you get that bearish option activity, AMC stock has tended to fall. But you're actually seeing that effect from somewhat of a gamma squeeze today that is making AMC actually rally at the same time. So I think that is also pretty encouraging. Now, if we take a look at the Ortex data, you are looking at 23.21% short interest of free float, 120 million shares currently sold short, but the cost to borrow fees are spiking again today. Cost to borrow average at 266.75%, cost to borrow max 294%, cost to borrow minimum at 96.85%. Interactive Brokers has a cost to borrow fee of 122% currently for AMC, with 150,000 shares that are currently available to be lent out. At the same time as this rally is taking place, you do have a days to cover of 8.02, meaning the short position well outweighs the average volume in AMC. The short position in AMC is 8 times the daily average volume that you have been seeing. So this does put a lot more pressure on shorts, and it really tells you that AMC stock could continue to rally substantially from here, guys. So there you have that. As far as kind of what I expect now with this new information from AMC, I think a rally to $6 per share, really to get to this 200-day moving average by the end of this week, is definitely in the cards, especially again if up to 42 million shares need to be bought back by market makers by this Friday. That's, I mean, a pretty conservative estimate, I think, in my personal opinion. It could go even higher than that, especially if some shorts start to cover on short positions. But we do know there's the underlying bearish option activity or option flows that we continue to see that are negatively affecting the stock. And you also have a big catalyst for AMC at the end of this month, June 29th. You're going to get the next court date. And that's, who knows how that's going to play out. It's going to have a bearish effect on AMC stock. That for sure we do know, guys. So that is going to do it here in this video. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.